following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Good morning, everybody. Tom's out today, jumping right into the markets. We have the S&Ps up 12 points right now. NASDAQ 100 up 31. Dow up 96 points, and the Russell up a solid 1.5% to kick things off. All markets right relatively near all-time highs. You're looking at an S&P basically about 30 to 40 points away from all-time highs that we made on Tuesday of 39.59 in the futures, currently trading 39.22. Got to talk about Bitcoin to kick things off. This is a daily chart I have on Bitcoin. Talk about a parabolic run here, folks. And parabolic, we'll see if it ends in a parabolic run. Not so much the case so far. As you have Bitcoin, you back it up to just December 11th, and you're trading at 17,000, right? The first run, you go from 17,000 up to a high on January 8th of 42,000, okay? Quite the acceleration when you're talking about. So what is that? That's about a 25,000 A to B leg, you could call it. Okay, now I'm pointing this out because you go from 17 to 43. Okay, you're talking about a 25,000 A to B leg. You back off. Let's put the Fibonacci number on here. Our man Larry Pesavento, Fibonacci 24/7. You back off exactly a 50% return retracement from those levels. You chop around a bit, and then you go from 30,000. Folks, the A to B, C to D, you're talking about 55,000. So watch that level. Talk about a round number, 55,000. Our man Basil Chapman with the round numbers. Something to keep your eye on, as maybe we might be reaching a level a little bit lofty right now. In the long term, my opinion, Bitcoin might have a place. You're talking about professional money managers now. You're talking about big-time players in the market allocating money into Bitcoin. But in the short term, man, you just went from 17,000 up to 55,000, and there it is, right? We had a nice 50% retracement. We're now coming right up to the area of an A to B equals C to D expansion. 55,000 would be that mark. Quite a round number. We'll see where we go from there. And then if you want to talk about just the retracement that you could have of a healthy move, right? If you're talking about a healthy move, if you hit 55,000, a 382 retracement could bring you all the way back down to about maybe 44,000, 45,000, somewhere in that area. Something to keep your eye on. All right, jumping around to equities we have moving this morning. Yields, got to talk about yields, right? We're looking at a yield right now in the 10-year of 1.33%. You had the Treasury Secretary out there yesterday pushing for more stimulus. Stocks accelerating higher today. You had Janet Yellen talking to CNBC after the bell last night, saying more stimulus is necessary, even as some economic data suggested a rebound is already underway. She added a $1.9 trillion stimulus deal could help the U.S. get back to full employment in a year. We live in exceptionally interesting times right now, folks. We had weekly jobless claims yesterday coming in. I think it was about 865,000 initial claims on a weekly basis. I always try and remind people that prior to COVID, the record for an initial weekly jobless claim, I believe, was about 670,000, right? We've never seen this type of acceleration so quickly. We've seen, tough economic situations before, but it's always been more of gradual loss of jobs. We've been stuck at 800, 700,000 jobs initially, a weekly jobless claim, almost going on a full year now, which is remarkable. Now, you combine that, though, with the hope of the future, the hope of the vaccines, the hope of getting over that. It's really interesting being in a time where we're dealing with such economic woes, a lot of that having to do with the service industry, which could be a good indicator of how things could rebound very quickly, because those jobs, especially if we get some stimulus to keep those jobs open so that they can literally just turn the key, start it back open, right? If these businesses shut down, you can't just open them back up. If they were able to sustain the next 4 to 5 months potentially, maybe even the next couple months, right? We're seeing some rapid acceleration of these vaccines. Hopefully that's an indicator of where we'll be in the future, but nonetheless, yields. Let's jump over to the 10-year and the 30-year, because we've seen quite the acceleration. The 10-year right now, look at this thing when you put it on a daily, right? Can you spot the trend? Yes, the trend is down in price. higher in yield. We got the 10-year right now down 11 ticks at 135.16. We haven't seen this price level going back to basically March, the depths of the lows of March. And you look at the 30-year, we're down more than a full 1.4 ticks. Now compare that to the 10-year, right? Now this is a continuous we're looking at, but you're well below where we were on the lows of the acceleration in March. We're now at 163.13. We were talking to our man Teddy Kegstad yesterday about some Forex, and we were talking about that this thing is down 20 points from where we were just in August. A remarkable, remarkable move on that 30-year. And yeah, I mean, there's a lot of writing going on out there, right? What happens? Rise in treasury yields prompts speculation of a tantrum for the market. Something to keep your eyes on, folks, because, man, if we start seeing anything like the Fed hinting that they might be okay with rates rising, you're going to see a little bit of diciness going on in this market. Just something to keep your eyes on. All right, jumping around to what else we have going on. We had home data, home sales coming out right at 10 o'clock. Existing home sales rise slightly in January, but record low supply weighs on the market. So you have closed sales of existing homes in January increasing 0.6% compared with December, according to the National Association of Realtors. 1.04 million homes for sale at the end of January. That's a 26% drop compared to a year ago. Sales ended the month at a seasonally adjusted annualized rate of 6.69 million units, 23.7% higher compared with January 2020, second highest sales pace since April of 2006. I mean, remarkable. This housing market, you're seeing very low supply, and you're seeing basically a market where, depending on where you are, though, that's a big deal as well, because we know New York, a tough market right now in New York with a lot of businesses affording people, workers, the ability to work from home. You have people capitalizing on that opportunity, moving to states, one of them like Florida, lower taxes, higher quality of life in some areas for some people. It's an interesting time, as I mentioned, to see how that shakes out. The lack of supply in the face of strong demand continues to push prices higher and higher. The median price of existing home sold in January, $303,900. That's a staggering level when you think about the median price. Okay, that's not the average that is going to get weighted by some of these very high-priced homes. That is the median. That is the middle price level of all sales from the month of January, a 14.1% increase from January of last year, the highest January price that the realtors have ever recorded. That is a high price when you're talking about a median price level in a big way. We need to build more homes. Even though housing starts show a decline, it's interesting that housing permits, the desire to build homes, remains at the highest in over a decade. The days on the market continue to be very swift, with the home selling on average of 21 days. That's less than 50% of where you were last January, which was 43 days. Staggering when you look at what's happening in that real estate market. Now, low rates was really driving a lot of the retail consumer action in terms of that, but this real estate market, you're seeing, whether it's ETFs, right, whether you're seeing hedge funds, Wall Street titans getting in there, buying homes, consolidating, keeping them, just renting them out. Supply, a tough one in that real estate market. All right, folks, we got the S&P's up 8 points, NASDAQ up 12, Dow up 89. Stay tuned. We're going to come back. We're going to be talking Roku. We're going to be talking Uber. We'll be right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. We got markets in positive territory, jumping into Roku. Roku right now down 1.6%. They were out there, their earnings last night after the bell. Strong earnings in a big way. You see the volatility when they come out with those numbers, chopping around between a low of 435. We were up to 470. Right now, you're down about 1.5%, down $7 at $445. Last night, they closed at about $453, give or take. And that equity had an expected move coming into their earnings of almost $44. So quite the volatility, a lot of uncertainty in terms of where they were going to be, and you're only off about $7 right now. So not quite the volatile move that the market was pricing in. All things considered, this equity, you could say priced for perfection. When we just rode from November 2nd, you were at $200. You were at almost $500 earlier this week, kicking things off on Tuesday, trading up to $486. We're now trading at $447 for Roku. Getting into their numbers in terms of what they had, Roku shares rose 1.4%. That's pre-market, not much the case. We saw it sold off. Quarterly profit of 49 cents a share. The market was looking for a loss of 6 cents a share. How about that, right? The device maker's revenue also beat forecast. A 58% surge in consumers stuck at home during the pandemic saw more video entertainment. Roku is a super strong company, in my opinion, in the long term, but you better be. When you just traded from 200 up to 486, giving back some of those gains so far this morning off 1.3%. Uber shares. So check this out. Always interesting action. All right, we got some notations here on the chart that I'm looking at. We have Uber in my newsletter, Rocket Equities and Options. If you'd like to check it out, folks, you can get a 30-day money-back guarantee right at the front page of TFNN or under the newsletters tab. You got an A to B, C to D, possible A to B, C to D projection of 74.02. I like the acceleration we had past that B point. We've backed off a bit. Now, remarkable action when you think about, right? Look at this action on Uber. So they get a ruling in the UK that their workers are workers and not basically contract employees. You spike down to 56.63, and we are positive by 2% so far this morning. Interesting action in a big way. We're going to jump over to the story. So Uber lost a UK Supreme Court ruling over the rights of its drivers, a landmark decision, quote unquote, is how Bloomberg puts it, that strikes a blow against the gig economy. This one's an interesting one because in the U.S., you had California go into the polls in November, right? And Californians, one of the most liberal states in the union, choosing that Uber workers are basically contract employees. And from a business owner, employee myself, right, the fundamental nature of a contract employee, and listen, I'm all about unions, folks, all right? This gets a little political, but I'm all about unions, okay? But when you talk about just deciding that you're going to classify all workers as workers, the definition of a contract employee is somebody who's able to work for multiple companies. You pick up work when you want. You're able to decide that when you want. Uber is basically putting out, and I'm biased, we get the stock in our portfolio, okay? So full disclosure here. But the reason why we have that stock in our portfolio is because I believe in that business model, and there's nothing more simple or more basic when it comes to a contract, a self-contracted work where you're basically just picking up work when you want. You're able to work for Uber. You're also able to work for Lyft, okay? And it doesn't mean that I don't want to fight for a livable wage for everybody in this country and beyond. But in the U.S., that seems to almost be a settled case. With California going to the voter rolls, I don't see the Supreme Court stepping in any way in that. So maybe just the market waking up to the fact that, okay, the U.K. is doing this. How this plays over in Europe, you could see some reverberations, but you got Uber trading higher today. So you have the judges unanimously ruling that Uber drivers are workers, entitled to rights like minimum wage, holiday pay, and rest breaks. Uber shares fell as much as 4%. We now know that did not hold, and Uber is higher. The ruling will have a significant impact on the UK's burgeoning gig economy. It comes amid a broader global fight over the rights of workers on apps. So what I don't understand here is, the business model of Uber in terms of just putting rides up for sale, basically on their app, right? The driver says, I'm willing to drive right now. I will claim that ride, and I will drive that ride. How do you provide holiday pay and rest breaks for people who have the ability to work whenever they want? I don't even know how that factors into that business model. I don't. And the quotes here, some of them, it's going to make it harder for companies engaging people via digital platforms to assert that they are self-employed. The ruling strikes at the heart of Uber's business model. Somebody else talking about here as a business, it will need to reflect very carefully on the implications of the judgment. The London is one of Uber's largest, most lucrative markets, 45,000 drivers, 3.5 million people who use the app once every 90 days. Tens of thousands of Uber drivers can now claim the right to be classified as workers. The firm will now seek compensation for thousands of drivers who say they're entitled to an average of $16,700 each. I don't know how that plays out. We're about to find out. But nonetheless, we got Uber shares this morning. Check it out. Charging higher, up 2.2% on the heels of that ruling this morning as the market kind of shakes it off. Maybe that will be a one-off ruling in the UK. We'll see how that plays out. But the market not showing much fear in the face of that. And here's one last thing to keep in mind if you're looking super long-term. And this isn't quite what we're looking in my newsletter, but it's something you should keep on your radar of where these are all going. Drivers, people are not a part of the long-term business plan on Uber. Not sure that's a good thing for society right now, okay? But when you talk about Uber, drivers are not an element of that business plan when you look 5 to 10 or maybe even 15 years down the future. Self-driving cars, they're coming, folks, and drivers, unfortunately, are going to be taken out of that equation at some point in their business plan. So while that might be quite a setback in the UK in the short term, and this is not a reaction to that because I'm talking super long term, and the market ain't looking 5 or 10 years down the road to trade higher this morning on that news. But just something to keep in mind as all of these battles play out for the gig economy and people driving. It's an automation deal that is eventually going to come full circle, and Uber is going to be at the forefront of that when we get those self-driving vehicles. We already have vehicles in St. Pete that are doing very short rides of very short levels of interaction, whether they run 2 miles, 3 miles. The vehicles are very aware of their routes. They've ridden it many times. One of the toughest things, Dave White's talked about it many times, is to plan for every single scenario in the world, right? If you say a vehicle needs to drive from Florida all the way to Alaska, right? The amount of roads you're going to see, it's you almost can't plan for the type of variables that you need to plan for right now. But when you're talking about just small rides, maybe in the city, maybe in New York City, where you know there's just one grid of X amount of streets and X amount of variables, and you can basically plan for every single scenario, that is something that we're almost already at. And so you're going to see that transition take place over the number of X amount of years, and we'll see how many. But Uber is up this morning 2%, jumping over to Lyft. Their shares charging up 3.6%. Interesting action for the ride-hailing companies on the heels of that ruling. So we get the markets catching a little bit of a bid this morning, up 13 points in the S&P. We'll take a look at gold when we get back. Gold with some volatility as well. Spikes to 1790, back to 1779. Gold been struggling a bit. Stay tuned, folks. We'll be right back in 3 minutes.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome Welcome back, folks. I got a chart up here. John Deere, quite the acceleration to higher prices. We're up more than 11% right now, up $34, trading at $334. That or thereabouts on their earnings. Strong, strong numbers. We're going to get right into them. How about the forecast for profit? So in November, Deere forecast roughly $3.8 billion in profit for the fiscal year. How about talking about $4.8 billion now? Quite the acceleration when you look at that comparison. In terms of the last numbers they had, they were looking at $3.8 billion in profit for the fiscal year. You're now talking about maybe $4.8 billion. They see fiscal year 2021 net income in the range of $4.6 to $5 billion. When you get into the top line number in terms of bottom line, the earnings per share, here we go. They reported $3.87 per share earnings from $8.1 billion in equipment sales. The market was only looking for $2.15 in earnings from $7.1 billion in sales. They had an extra $1 billion in sales in just 90 days, and they're now saying they're going to make an extra $1 billion for the fiscal year coming up in 2021. The market reacting accordingly. You put on a daily. Check out this stock. My goodness. From 106, we're now trading at 335. That's a daily. You back things up on a 5-year weekly. We chopped around for a while between about 100 and maybe 180. This thing's been a rocket ship since the lows of March, trading at 334. And I think as we back it up, that's basically all-time highs across the board for John Deere as it just continues to accelerate higher. All right, what else we got going on? Jumping into some of the stocks making moves this morning. So we talked about Deere, Roku, and Uber. Dropbox is out with their numbers as well. 4 cents a share ahead of estimates, quarterly earnings of 28 cents a share. The cloud storage company's revenue also above Wall Street projections. Dropbox had a greater than expected number of paid users during the quarter, as well as better than expected revenue per user. It's all about the forecast. Forecast full-year revenue below analyst estimate. That's always a dagger, right? It's not what did you do for me yesterday. It's what are you going to do for me? DBX, is that what they are? Dropbox? Yes, it is. What are you going to do for me in the future? You spike higher initially on the beat in terms of the market looking at the numbers, but guess what? When they break into things and they see that the forecast is going to be lower, that's probably your acceleration, I'm guessing, the forecast when they talk about it on the conference call, and we're now trading down about 3.2% for Dropbox. All right, we got a call. Let's go to our man Mark in Bedford. Mark, good morning. What's happening, man?
Hey, pal. How you doing? Congratulations.
I'm doing great, man. Thank you so much. Thank you so much. I appreciate it. How's your Friday morning going?
Great. I got stuff going on in West Africa that everybody I talk about thinks I'm conning them because it sounds strange, I got some mining operations going on. So this is one of the mines that I've kind of tried to do business with it's B2 Gold, and I kind of know them. I've met their people, let's just say, and I'm kind of just interested because I bought some of this equity a little while ago at like 480, and I'm kind of figuring what you think.
You know what? For some reason, my Thinkorswim platform is struggling to pull this one up right now, Mark. And it's BGG. Is that Briggs and Stratton?
No, it's B2 like it GG, BTG, B2 Gold.
Sorry, say that symbol again for me. B like boy.
B is in boy, T is in toy, G is in gold.
BTG. There we go. I got it. Thank you. Okay, so B2 Gold, perfect. We got them down about 0.5% right now. We'll put it on the daily. We've backed off a bit. You go from $2 in the lows of March. We're up to $7.55. Let's real quick take a look at the Fibonacci retracement. So we're right at the 50% level right now, Mark. We had some big-time volume as this thing kind of was accelerating, maybe in that August acceleration. And so what does this company do again? You were talking about it. I'm pulling it up. They're in West Africa?
Yeah, their money-making mine is a place that I have a permit near.
Okay.
M-A-L-I, Mali. And
yeah,
they have just about most of their revenue comes from this one mine called Fekola.
Okay. I'm just not familiar with the company in particular. Some of these companies, what's the market cap on this company? Do you know? Because what happens is some of these smaller companies, they don't even have the full breakdown here in the Thinkorswim platform. Do you know what kind of a company we're dealing with?
I don't know, but I think, the way, like I've read the pro forma and the reason why everybody's saying, oh, this is not, they actually had no dividend, and now they're paying like a 12-cent dividend.
Okay.
And they, when I meet with them, they say, we're a junior, soon to be a senior. And I'm like, okay, I get that. I totally get it.
Yeah, anytime that you can, be in an equity and it crosses that line, right, in terms of, crossing the valuation from a junior to a senior, the little bit of volatility gets sucked out of the market in that equity. Gold has been struggling, of course. We saw the run it had from 1,500 up to almost 2,100. We've backed off to 1,781. E2 Gold, pretty similar pullback there. You're right at the 50%, which is not bad. And you do have some volume up here at those August levels as well. But, man, we did see an acceleration. The only thing that makes it a little dicey, man, is you go back to, and I'm looking at a weekly right now, but January 4th, we saw some big volume, almost 50 million shares as this thing accelerated from about $6 down to 531. Big volume again on the next level on the January 11th bar. I'm going to put it on a daily real quick as well. So, I just be careful, man, seeing the volume accelerations as this thing.
Okay, so here it is, right? One of my friends from Harvard and his buddies took over the country. They're called the military. And they overthrew the government. It's a long story, but at some point you'll see me. I just opened a new website, and it's called goldsafaris.com. So you can imagine what that's all about. Basically I can go out there and pick up gold at $500 an ounce. It's a pretty simple deal too.
Mark, I've heard you talk about this before, and if you can go pick up gold at $500 an ounce, man, gold's trading at $1,700. I don't know what you're doing calling it the TFNN. You should be, traveling the Pacific in a yacht for yourself. So,
no, trust me. At this point, I'm headed in a couple of weeks. I'm actually driving to pick up some dough to get in my bank, and I'm opening up.
I don't know how you're picking up gold at $500 an ounce, man, when it's trading at $1,700. If you are, use your time more wisely than calling TFNN because you got something happening. I don't know if that's the case, though, man. This equity, it's backed off on a 50% equity, the pullback. So that's an area that you could maybe, start to look at. It chopped around in June. But in terms of you having friends taking over places and countries, more power to you, I guess, if that's the scenario. All right, let's jump back in. Thanks for calling, Mark. S&P's up by 11 right now. NASDAQ up by 26. We got the Dow up 103 and the Russell charging higher right now, up about 2%. Stay tuned, folks. We'll be right back after the break.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Are you grinding in the market but seeing little to no return? Or are you a successful trader simply looking to make his job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month and try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We got a question over in the YouTube Tigers Den from our man Ryan. He's asking about TWI. So we're looking at Titan International. They're a wheel, tire, and undercarriage industrial manufacturer and supplier. They're talking about agricultural products, including rims, wheels, tires, and undercarriage systems and components manufactured for the use on various agricultural equipment. They got a good chart out here, Ryan. Putting this thing on a daily, you back things up. Man, we were at $1 going back to May. The acceleration really begins coming out of their August earnings. They really crushed things, I guess, going back to November. Now, checking out where they are, and I love the Analyze tab on the Thinkorswim platform, folks. They are a sponsor, but I'd use them anyway. You go over to the earnings tab. They got earnings coming up on March 4th. So something to keep in mind there, Ryan. When you look at it, you jump over maybe to the simulated tab when you're talking about what they're coming out. I mean, the earnings, you go out just to March, and they get some volatility priced in. You're an $8 stock. And you got maybe a $2 move potentially priced into their earnings for the implied volatility pushing past their earnings. But jumping back to the chart, what I really like to see here, you start the first run coming out of November earnings. We give back really some numbers. Not sure what happened on December 14th. But if you look, I mean, this might be a nice A to B, C to D. If you start the run on December 22nd, your A point is about $4.25. You run up almost to $8, so you're talking about a $3.75 move. A to B, this thing plows forward. I mean, that's what you like to see, right? You crush over this number, but man, we gave back a lot of that. We're building a little bit of resistance right here, but if we can push forward over this high that we had from January 20th, that high is 1 penny away from where we are right now. So we got a nice move today, up 8.6%. But the A to B, C to D, as you mentioned, A point about $4.25. Your B point would be up here at about $8. Your C point would be down here at about $6.30, give or take. So you're talking about a $10 projection would be the projection up there for your D point, potentially on the A to B to C to D projection on TWI. All right, what else I wanted to talk about? So many times you'll see equities, whether it's, the airlines, some of the CEOs, some of the service companies saying, if you want me to forecast future expectations, I basically have to be an epidemiologist and forecast the virus, because our businesses only come back when the virus goes away. Some encouraging data out here talking about the vaccine supply, and I'm going to focus on the U.S. in general here. The U.S. vaccine surge is coming with millions of doses promised. So this Bloomberg article here is talking about vaccine supply poised to double in the coming weeks and months, according to analysts, allowing a broad expansion of doses administered across the country. So right now, we're looking at a number, okay? And this is the number of current. This is not a projection. The U.S., the latest vaccination rate is about 1.6 million doses per day on average, all right? We see the chart here. We got a little bit of ebb and flow that has to do with the weekends coming up, whether it's the 5 days during the week. You see the ebb and flows, a little bit of a dip here, but getting back into the projections, and this is some big numbers. So right now, the U.S. is constrained by a recent supply of about 10 to 15 million doses a week. Okay, but COVID-19 vaccine manufacturers and U.S. officials accelerated their production timelines and signaled that the spigots are about to open, providing hundreds of millions of doses to match growing capacity to immunize people at pharmacies and mass vaccination sites. Okay, a review of the drug makers' public statements and their supply deals suggests that the number of vaccines delivered should rise to almost 20 million a week in March, more than 25 million a week in April and May, and over 30 million a week in June. By summer, that means you're talking about 4.5 million shots a day. Folks, if you're doing 4.5 million shots a day, over 10 days, you're talking about 45 million people. Staggering numbers. And guess what? It's February 19th. February, we got 28 days in the month. We're going to be in March before we know it. Something to keep in mind, because as I mentioned at the beginning of the show, we live in very interesting times right now with some harsh economic data, but never before in my lifetime have we been so certain, all right? And there's always variables in play, all right? Nothing is certain in life, folks, okay? But this data is something you got to keep on your mind, because whether it's you're talking about cruise lines, whether you're talking about airlines, whether you're just talking about service industries, restaurants, the likes of Uber, Disney, two of my favorites out there, okay? The reason why we're still in Disney in my newsletter and Uber is because they still have so much negative weight on them having to do with the economy opening back up. I mean, we live in Florida. Yes, Disney is open, okay? Disneyland is open, and I have friends that have gone. But it's a much different scenario in terms of just the aura around taking your family to Disney. Yes, some people are comfortable. Many people are not. Maybe you wait until this. But, boy, can you imagine the day where we reach a level of vaccinations of almost herd immunity? Now, here's where manufacturers promising enough shots to cover the U.S. by Independence Day, July 4th. Folks, it's going to be March in 8 days, 9 days. And you look at where we are, so encouraging data when you look at where we'll be. We're at 10 to 15 million doses a week right now, and we're talking about 20 million in March, 25 million in April and May, and over 30 million a week in June. And by the summer, you're talking about 4.5 million shots a day. Got to keep that on your radar, folks, especially when you're looking at some of the companies that are most impacted by the restrictions going on in particularly the service industry, man. And like I talked about it, Disney, Uber, restaurants, airlines, cruise ships, my goodness, right? Can't imagine trying to operate a cruise line, let alone even thinking about stepping foot on a cruise ship anytime soon, until there's basically a zero chance that I'm going to be one of the people that gets stuck on that cruise ship if just one case gets found. Additional details from the companies make it possible to model their deliveries more precisely. Pfizer has said that it will have shipped 120 million doses by the end of March, more than 10 million a week from now until then. Moderna this week said it would deliver 30 to 35 million doses a month in February and March, and 40 to 50 million a month after that. Because of the differences in how the doses are manufactured and then made available, the projections may not exactly match. We're dealing with projections here, okay? But the projections are pretty rosy considering where we are. Things are about to accelerate in a big way, I believe, in these vaccines, and you're going to see that now. Now, the other side of that trade, folks, is that you better believe that this market is pricing in that expectation, okay? So overall, you know, what's the phrase? The phrase is you buy the rumor, sell the news. We're sitting at all-time highs right now in the S&P on the expectations that we are about to round the corner on these vaccines. You're going to see some winners and losers. You're going to see stocks that have accelerated higher during stay-at-home potentially pull back a bit, okay? I mean, Zoom, and I have some Zoom in some of my accounts, okay? Zoom, strong company in the future, but man, talk about some volatility recently. You go from a price point of 310 up to 588. You fill the entire gap in Zoom down to basically 330. We're now trading at about 420. They're the one that comes to mind. But boy, you think about the likes of Disney sitting up here at 184 at a time when they aren't even open in California right now. Uber trading higher today, but they suffering the lag of social travel as well. Stay tuned, folks. We'll be right back after the break.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, just $89, exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got a question in the YouTube Tigers Den, AMTX. So Ametis Inc. All right, this company right here, jumping over the Analyze tab on the Thinkorswim platform, International Renewable Fuels and Biochemicals Company. Now, one of the things I always look at, folks, when I'm looking at some of these companies that are really chopping around in some crazy fashion, what kind of market cap we're dealing with? We're dealing with a $180 million market cap, very small company. All things considered, okay? Something to keep your eye on, because if you think that any company is an absolute gold mine and it's trading at 50, 100 million, 150 million, there's some really brilliant minds on Wall Street with almost unlimited checkbooks that can buy a company outright. All right. And the thing that really makes me just not understand where this company's going is that I get a daily up here. This thing did 64 million shares on the day that you spiked, obviously on some news, up to $11. Maybe it was on Reddit. We live in interesting times, up to $11. We're chopping around at 826. I know you said you got a little bit of this position. Just be careful in this equity, because anytime you go from a price point of $3 up to 11 in one day, you can give back anything in this equity. And just Fibonacci wise, you're talking about maybe a 50% would be 763. If this thing goes anywhere below maybe $6.84, I'd be careful in that equity as you give it back. All right, a couple other things I want to take a look at, just some cool stories out there. How about Ford? Texans using their Ford F-150 hybrid trucks to power their homes amid a winter storm. Just remarkable what's going on in energy right now when you think about the capabilities of what happens there. And then how about yesterday? NASA landing the Perseverance rover on Mars' surface, carrying the first helicopter for another planet. Pretty interesting where technology has taken us, folks. And the last thing I wanted to jump over, next week, we got some big earnings next week. We got NVIDIA, Salesforce, Home Depot, Lowe's, DraftKings. Big numbers, folks. Stay tuned. We got our Fast Market coming up next. Basil Chapman, Steve Rhodes, Dave White, Tom O'Brien this afternoon. Have a great Friday, folks. We'll be right back in 3 minutes.